Good morning. Thanks so much for tuning into the trade setup. And a slightly dovish commentary from the Fed led to a bit of a pullback in the US markets yesterday. So they ended off the day's low, and the futures are marginally higher. You will not see too much of excitement here on the reported percentage performance, but they ended off the lows, which is a great sign. Asia Pacific stocks, though, largely mixed ahead of the Chinese GDP data. The rupee ended at 79.87 in the NDF's sub 80. So the rupee dollar is now 80. I remember in 2000, I don't know, maybe 8, 9 or slightly around that time, we were at 36 or we were at maybe 38 or 37 to the rupee. From there, it's been 100% depreciation, if you will. India's trade deficit, of course, rose to a record 26.1 billion in June as imports surged quite dramatically YOY. But as I said, the Qs are okay. The dollar index, of course, would be higher. I think the dollar has been ripping through all asset classes, and you probably see the dollar index continuing to stay above that 108 mark, which is the problem. But just a sense that aside of the dollar index, of course, the very sharp reaction to bad news is kind of at the margin coming off. And I'll tell you why during the course of this whole trade setup. So one, and the converse is also happening, by the way. So keep that in mind. Bitcoin is about 20,000, so that is okay. The US 10-year yield is about 2.94, so that stays sub 3. And the SGX Nifty should come up on your screen next. That is indicating a start which is marginally in the green, 15,988. So for now, just in or around that 15,900 mark. It'll be interesting to see how the day shapes up. Now, the problem, though, I mean, this intermittent rise today notwithstanding, the Nifty 50s formed a lower high and lower low for the fourth consecutive day. That's not a very great technical structure to be in, but keep in mind it's not sinking. It's kind of defending, not reacting very, very adversely to bad news. In fact, the fact that the US markets also, the 10-year yield did not crack too much, as Jeffrey Dennis was saying yesterday, to the inflation print, and some bit of a slightly bullish or a slightly dovish commentary from the Fed. Who knows, things which was on yesterday, who knows, things might actually be okay. But technically the Nifty's formed a lower high lower low for the fourth consecutive day. I think the support stays at 15,700, but the market is likely to be dictated by global moves. Energy remains a sector in play post the talk of the windfall tax removal, but unlikely that the PSU stocks get back to normalcy. I mean PSU energy stocks get back to normalcy. Keep in mind, GRMs have fallen quite substantially. So that is the other thing that everybody got to keep in mind. Just one thing. So if you look at what JP Morgan's note today is, of course, also saying that they are saying that they do not see any change in taxes in the first fortnightly review, even as Brent has come off sharply, because the first fortnight post taxes, Brent has fallen. The GRMs driven by lower gasoline and are down, though diesel cracks are likely firm. No, we're done with this straight setup plate. Just keep in mind energy is the limited point I'm making. Yeah, they are saying the Brent price, of course, has fallen, but they don't see any changes there. GRMs viewers have fallen from $20.4 per barrel to $13.9 per barrel, which implies marketing losses on diesel, which have fallen sharply to 5.7 rupees per liter from 17 rupees per liter. Could it mean that some of the OMCs might be okay, but the upstream companies and Reliance in particular might face a bit of a ceiling, if you will? Remains to be seen. The other point, viewers, is IT, right? That's been the big talking point. Just morning I've tweeted about why Kenneth Andrade is bullish there. But look at what's happening here. Nifty 50, so Nifty IT, it lost another 1.58% yesterday, right? It was led by short build-up in mid-cap IT stocks yesterday. And TCS fell below 3,000 for the first time since March 2021. Still trading at about 30 times, circa 30 times, but below 3,000. Delivery volumes for stocks like Mindtree and Birlasoft were 250% above their 30-day average. And yesterday, almost everybody thought that Mindtree could actually perform really well post its numbers. A sharp down day. So mid-cap IT is being taken to the cleaners. And today, Morgan Stanley's come out with a note saying, I mean, the tactical sell on HCL Tech, tactical sell on Wipro, emphasis is the only long. And they are saying that despite all the falls that have happened, because the sector trades at premiums to long-term average multiples, there could be more downside. In fact, they are also saying, by the way, viewers, that during periods of slowdown, which is FY 17 and 18, the IT stocks even traded below long-term historical averages, and therefore there could be some bit of derating even more in some of the IT names. So it could be interesting. I believe, though, viewers, that some of the mid-cap IT names are now trading around their averages or maybe long-term multiples, and therefore the selling in select IT names will be there, but not all IT names might get clobbered. So please keep that at the back of your mind. The consensus favorite, though, seems to be Infosys. Morgan Stanley has a preference for Infosys. Nomura has a preference for Infosys. I read two more notes which said that prefer Infosys over TCS on a relative basis as well. So could be interesting. FIs yesterday net bought about 309 crores and DI sold about 556 crores. That's the other thing. The FI selling is now kind of abating. A lot of people are saying kitna aur bechenge. Remains to be seen. The stock of the day, despite the fact that IT is not a sector in flavor, could well be Tata Elxsi. Now, I might have to eat my words because yesterday I did have to. I thought Mindtree could turn out to be the stock of the day. It did turn out to be the stock of the day for on the wrong side because it got clobbered. But just a fabulous performance from Tata Elxsi once again. Revenues up 6.5%. It didn't beat estimates by a margin, 725 in fact, versus the estimate of 729. But 6.5% is a number that you would take any day. EBITDA up 7.6% at 238, much better than the Bloomberg estimate of 218. EBITDA margin at 32.8, Bloomberg estimate of 30%. Net profit up 15% at 184. The estimates were 160. Not only that they grew 6.5% quarter on quarter, they improved upon the EBITDA and thereby on the net profitability numbers. Well, really strong show by Tata Elxsi, I must say. I mean, the multiple other things, right, which work for Tata Elxsi. I think the headcount crossed 10,000 employees. The attrition rate came off. The margins at the 32.8% number that I spoke about are industry leading, so to say. All in all, I mean, you couldn't find too much of fault really. SIS division grew about 19.8%. EPD, IDV both grew 6.2 and 6.6%. So, really the stock did well. Now, the company did well in quarter one. Could the sector derating impact Tata Elxsi today as well? Maybe, but net, I think it did well. Some other stocks in focus, just to bring about a change from IT, because I'll get back to IT in a moment. But Angel One, Q1 FY23 numbers, revenues are up 45%, 669. The estimates from Bloomberg were 510. EBIT up 47% at 245. EBIT margin at 36.68 versus 36%. Net profit for Angel up 50% at 181 crores. The estimates were over 72. It did all the right things really. Let's see if the stock gets rewarded. There's a clear chalk and change happening between an Angel One versus an ISEC, for example. Though I did think 5paisa did okay, but let's wait and watch. There are headwinds for the brokerage sector. Let's see if Angel One is able to thwart those. We'll be talking to the management, if not, I think on Monday, if I'm not wrong. So it could be an interesting conversation with Narayan Gangadhar. LTI, getting back to IT, those numbers are okay. Revenues up 5% at 4522 crores. The estimates were 4483. EBITDA 830 versus estimates of 783. Net profit at 663 versus estimates of 579. So on a headline number, okay, but compared to estimates, did well. This might not be necessarily good enough to save the stock in a sector derating. It's not a Tata Elxsi performance, but I think it did okay. Morgan Stanley is an equal weight there with a target price of 3,900. They say they report an all-round beat on revenue and margins, and the management commentary was more constructive than peers on demand environment. And I can second that because we did speak to the management in a recorded conversation yesterday, which will be played out today at 9:30 on LTI or 9:50. So you might want to tune in there. And they are saying, of course, Morgan Stanley is saying that the valuation premiums to the last 5-year averages and a weakening macro environment drive their equal weight rating for LTI. So let's see, maybe the stock is a bit of a pullback today. You will hear the management, as I said, and they sounded constructive, by the way, on demand. You will hear them at 9:50 p.m. 9:50 a.m. today on BQ. So watch out for that. ACC numbers came out and not the best of numbers, unfortunately. Revenue was okay, 4468 versus the estimates of 4390 and grew 15%, but EBITDA down 51%. The estimates for 502 came in at 426. EBITDA margin at 9.54%. Net income down 60% at 227 versus 304. I mean, it got really shabby cost controls out there from ACC's side. Morgan Stanley is an underweight with the target price of 2050. They say EBITDA below Morgan Stanley estimates and consensus estimates, driven by weaker than expected costs. They fine-tune estimates. Their driver 2022 EBITDA slightly lower. They maintain their underweight due to mainly lower growth expectations versus peers amidst limited expansion plans and high utilization rates. So not only will ACC have a cap on how much capacity expands, though I don't know with the Adani Group coming in when it changes, but be that as it may, for now, it doesn't change. And the costs are escalating. So not a happy cocktail for ACC. Maybe the stock reacts negatively. The other stock that could well turn out to be good would be Syngene. The company and Zoetis have signed a 10-year contract for manufacture of biologics. According to the company, this is a game changer. And I was reading a couple of people who track this closely. Tariq Hussain, who runs a handle It Star, has spoken about, he tracks this closely, I guess, because he says that this one could well be a game changer J-curve development for Syngene. Now, I don't quite know this about Syngene, to be very honest, so I'll refrain from commenting, but it does seem to be a good deal based on the press release that I read from the management. Vedanta could be interesting. The board meet on July 19th to consider a second interim dividend. Now, the key is they received, remember yesterday, Hindustan Zinc declared a fairly large dividend. And if Vedanta decides to pass on the whole dividend from Hindustan Zinc, then that's about a 15 rupee dividend on a stock price of 220, 225, as the case may be. So that's not bad. That's a good dividend yield for Vedanta shareholders. So maybe this stock has a bit of a pop. Adani Ports and SEZ, standard disclaimer, it's a part or in the process of acquiring stake in Quintillion Business Media, which owns BQ Prime. So standard disclaimer for all Adani Group stocks that I want to bring out every time I speak about them. But they've bagged an Israel government tender to buy the Haifa port. Not only they have some presence in Sri Lanka, now they have a presence in Israel. Well, it's not just a local leader, that's just an India leader. They're spreading wings. That could be interesting. Some other brokerage actions on auto in particular, Macquarie, Ashok Leyland has been cut to neutral. Escorts has been raised to an outperform, and Bajaj Auto has been cut to a neutral. So watch out for those. What stood out for me, viewers, before we wrap up, and like I was saying, that the market is not reacting to bad news, even if IT is reacting to good news as well negatively. But the market, right? The 10-year yield didn't sink too much. There was some expectations that Jeffrey Dennis said yesterday that the inflation print might be good in the US in this upcoming July number. And look at what's happening to the Amazon Prime Day sales. I mean, this is what Bloomberg is reporting, that Amazon Prime sold more than 300 million items over 2 days, which is more than any prior Prime Day. The strength of the US consumer. I don't know if the same will happen in India or no. From what I hear, 23rd and 24th is a Prime Day, maybe July. So it would be interesting to see how India fares on those 2 days, as also for some of the other online retailers, of course. So it could be interesting to see there. Nevertheless, viewers, that's the long and short of the trade setup today. Stay safe. Some interesting short positions being built in IT. I somehow feel that a lot of the stocks have been beaten down so badly that at some point of time, they will turn around and have a sharp move as well. I think I was reading an MK note which said that HCL Tech on the RSI charts is looking oversold as well. So never know. But Morgan Stanley believes they will fall relative to the index over the course of the next 30 to 60 days. So watch out for IT, watch out for energy, and an action-packed day in terms of results as well. So could be an interesting one trading day. Thanks so much for tuning in. Stay safe. Have a great weekend. And on the trade setup, I'll see you on Monday. But a bunch of result conversations from the IT pack slated throughout the day on BQ Prime. So you might want to tune in for some of those.